Welcome back to AlgoBot, the channel where we break down automated trading strategies piece by piece. I'm AlgoBot, and today we're exploring an expert advisor for MetaTrader 5 called Ichimoku Baseline Breakout. This strategy is built entirely around the classic Ichimoku Kinko Hyo indicator, using the conversion line, the baseline, and the cloud. It's a trend-following approach that waits for price to dip back to its baseline and resume in the direction of the cloud. By the end of this video, you'll understand exactly how it reads the chart, when it enters, and how it manages risk. Let's get started. So what exactly does this expert advisor do? At its heart, the Ichimoku Baseline Breakout strategy is a rule-based trend-following system. It takes the well-known Ichimoku Kinko Hyo indicator and distills it into a clean, mechanical set of conditions that a computer can follow without hesitation or emotion. The strategy watches 4 Ichimoku components, and all of them are derived purely from bar highs and lows. The first is the Tenkan or conversion line, a fast midpoint over the last 9 bars by default. The second is the Kijun or baseline, a slower midpoint over the last 26 bars. Then there are the 2 cloud spans, together known as the Kumo, called SenkouSpan A and SenkouSpan B, which are projected forward and shade the area that price is trading around. This expert advisor runs on a single time frame, whichever chart you attach it to, and it can be applied to any symbol your broker offers, whether that's a foreign exchange pair, an index, a metal, or another instrument. It only ever looks at completed bars, so it acts once per bar rather than reacting to every tick of noise. Who is this kind of approach suited for from an educational standpoint? It's designed for traders who like structure and who prefer to trade in the direction of the dominant trend rather than against it. The logic only looks for long trades when price is above the cloud, and only looks for short trades when price is below it. That single rule keeps the system on the trend side. Remember, this is an educational breakdown, not financial advice, and not a recommendation to trade. Every strategy, including this one, carries real risk, and losing trades are a normal part of any system. Our goal here is simply to understand how the code thinks. With that framing in mind, let's walk through the mechanics step by step. Let's break down the exact rules the expert advisor follows, one condition at a time. First, the strategy establishes the trend using the cloud. For a long setup, price must be trading above the top of the Kumo. The strategy reads the 2 cloud spans, takes whichever is higher as the cloud top, and checks that the just closed bar closed above it. Being above the cloud is the strategy's definition of an uptrend. Second, it checks the alignment of the 2 faster lines. The conversion line, the Tenkan, must be above the baseline, the Kijun. When the fast line sits above the slow line, the shorter-term momentum agrees with the longer-term trend. Third, and this is the heart of the setup, the strategy looks for a baseline reclaim. It examines the bar before last, and confirms that price had dipped down to or below the baseline. Then it confirms that the most recently closed bar closed back above the baseline. In plain English, price pulled back to its baseline, tested it, and resumed higher. That pullback and recovery is the moment the strategy signals a long entry. The short setup is the exact mirror. Price must be below the cloud, defining a downtrend. The conversion line must be below the baseline, and the most recent bar must have rallied up to the baseline and then closed back below it, a failed bounce that signals a short entry. Now let's talk about risk, because every entry comes with a predefined exit plan. The strategy measures volatility using the average true range, or ATR, over the last 14 bars. When it opens a long, the stop loss is placed a set multiple of ATR below the entry, 2 times ATR by default, and the take-profit target is placed 3 times ATR above. That gives a reward-to-risk ratio of 3 to 2, or 1.5 to 1. For a short, those distances simply flip to the other side of price. There's also an optional third exit. If the baseline exit switch is turned on, the strategy will close a trade early whenever price closes back through the baseline against the position. If a long trade closes below the baseline, the structure that justified the trade is considered broken, so the strategy steps aside rather than waiting for the full stop. Finally, the expert advisor holds only one position per magic number at a time. It never stacks trades. One clean setup, one position, one predefined plan. Let's look at the actual MQL5 code running inside MetaTrader 5. At the top are the input parameters you can adjust in the Expert Advisor's settings. TenkanPeriod, KijunPeriod, and SenkouBPeriod set the three Ichimoku lookbacks, 9, 26, and 52 by default. ATR-period sets the volatility window at 14. ATR-stop and ATR-target control the stop and target distances, 2 and 3 by default. Use baseline exit switches the early exit on or off, and lots sets the trade size. Now look at the buy block. The Boolean called long setup is true only when four things line up at once. Close is greater than cloud top, meaning price is above the Kumo. Tenkan is greater than Kijun, the bullish line alignment. Close prev is less than or equal to the baseline 1 bar back, and close is greater than Kijun, the reclaim. When all four are true, the code reads the ask price, sets the stop loss a stop multiple of ATR below it, sets the take profit a target multiple of ATR above it, and calls trade.buy with the lot size and those levels. The sell block is the mirror image. Short setup is true when close is below CloudBot. Tenkan is below Kijun. The previous close was at or above the baseline, and the current close is below it. The code then reads the bid price, places the stop loss a stop multiple of ATR above, the take profit a target multiple of ATR below, and calls trade.sell with the same lot size. Both sides use the identical ATR-based logic, only the direction changes. It's a compact, symmetrical piece of code. Now let's bring the strategy to life on a chart. On screen you can see a candlestick sequence with the Ichimoku components drawn on top, the conversion line, the baseline, and the shaded cloud, or Kumo. We'll walk through a long trade first, then a short trade, candle by candle. At the start of the sequence, notice that price is trading clearly above the cloud. The cloud sits below the candles, which is the strategy's signal that the broader trend is up. The conversion line is riding above the baseline, confirming that shorter-term momentum agrees. Everything the strategy needs for a long bias is in place, except the entry itself. Watch the next couple of candles. Price stops climbing and begins to pull back. The candles drift down toward the baseline, that slower Ichimoku line running beneath price. This is exactly the kind of dip the strategy is waiting for. On the third and fourth candles, price actually touches and closes just below the baseline. On its own, that dip means nothing because plenty of pullbacks simply keep going. So the strategy waits for confirmation. That confirmation arrives on the buy entry candle. Price closes back above the baseline, reclaiming it after the dip. All four conditions are now satisfied at the same time. Price above the cloud, conversion line above baseline, the prior bar at or below the baseline, and this bar closing back above it. The strategy signals a long entry, and you can see the buy marker appear right where price reclaims the baseline. The moment the trade opens, two levels are defined. The stop loss sits below the recent dip, a distance of 2 times ATR under the entry. The take profit target sits 3 times ATR above, giving that 3-2 reward to risk shape. Now follow the candles that come next. Price resumes its climb, candle after candle pushing higher, until it reaches the take profit target. The long trade closes for a completed move, and you can see the take profit marker where price meets that objective. Now the character of the market changes, and we get our short example. After topping out, price begins to roll over. The candles turn down, and, a few bars later, break down through the cloud entirely. Price is now trading below the Kumo, which flips the strategy's bias to the downside. Notice too that the conversion line has crossed below the baseline, the bearish alignment the short setup requires. Then comes the mirror of what we saw before. Price bounces, rallying back up toward the baseline from underneath. On the rally candle, price pushes up to that line, but the bounce fails. On the very next candle, the sell entry candle, price closes back below the baseline. That failed reclaim is the short signal. All four short conditions line up: price below the cloud, conversion line below baseline, the prior bar at or above the baseline, and this bar closing back below it. The sell marker appears right there. Just like the long, the exits are set immediately. The stop loss sits above the failed bounce, 2 times ATR over the entry, and the take profit target sits 3 times ATR below. Follow the final candles as price falls away, printing fresh lows until it reaches the downside take profit target, where the short trade closes. Notice the symmetry across both trades. In each case, the strategy only acted in the direction of the cloud, only entered on a baseline reclaim or a baseline loss, and always defined its stop and target before the trade began. It never predicted a top or a bottom. It simply reacted to price interacting with its own baseline in the trend's direction. That disciplined, repeatable structure is the whole idea behind this expert advisor. Let's wrap up. Today we broke down the Ichimoku Baseline Breakout Expert Advisor for MetaTrader 5. We saw how it uses the Ichimoku cloud to define the trend, how it waits for price to pull back to the baseline and reclaim it for longs or lose it for shorts, and how it manages every trade with ATR-based stops and targets plus an optional baseline break exit. Remember, everything in this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. All trading carries real risk, and losses are a normal part of the process. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MT5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.